Welcome to Inspiring China, a channel that brings you insight of technology, business and lifestyle. Don't forget to click the subscribe and notification button. Share if you like it. Your support is my motivation. The business of finance has always been evolving with innovation since it was introduced to our society. Shell money was used as the oldest form of currency in ancient China before the adoption of bronze alloys, iron, lead, and zinc coins. It was in the 19th century that the modern technologies such as the telegraph, transatlantic cable, steamships, and railroads built cross-border financial interlinkages, allowing speedy transmission of financial transactions, transfers, and payments around the globe. Today, we see the same familiar trend where the marriage of finance and technology once again transforming our lives. There is an indication of the word fintech was first used by Citigroup in 1993 as a project name that intends to bring technology collaboration with outsiders. Today, the vocabulary is being used perpetually and have becoming an umbrella term for innovative technologies, financial service startups, technology entrepreneurs, and even used improperly at times. In the financial industry today, there are two distinctive types of companies that are revolutionizing how customers are being served, what new products and services are available, and where it can be accessed. FinTech is the financial companies that use technology to offer better customer experience, product offerings, and at greater cost advantage. Typical representations are banks, insurance companies, and brokers. TechFin, on the other hand, represents technology firms entering the financial sector that disrupt the industry. Examples are Google, Apple, Facebook, and Amazon in the US, and Baidu, Alibaba, Tencent, and JD from China. Nevertheless, throughout this episode, I shall only use the term fintech and not to differentiate the two. China being one of the leading fintech powerhouses is no coincidence. The government policy in the 1980s already placed science and technology as one of the top national priorities to rejuvenate the nation's economy. It was in the same period that many technology companies started to emerge, with traditional hardware and software companies like Lenovo, Huawei, and Kingsoft. In the 90s, entrepreneurs rode on the internet boom, which created companies like Baidu, Alibaba, Tencent, and JD. The technology sector was given free rein by the government, which has set off China's technology boom that has thrived and accelerated, especially in the past 10 years. The fintech emergence started around the same time all over the world. Well, close enough. PayPal, as one of the leading global payment operators, started the email-based payment service in 1999. Alipay started as Taobao's payment function in 2004 that resolves complicated, lengthy, and unreliable offline payment transactions. The P2P lending concept was brought to China by Tang Ning, CEO of CreditEase in 2006, the same year Lending Club in the US was founded, to bridge the massive funding gap for borrowers who do not have credit history but were ignored by banks. Alipay and CreditEase are just two of the many pioneers who dare to enter a gray area of finance that is unknown, unregulated, and unchallenged, which ultimately turned into a $300 billion fintech market in China today. By 2018, majority of the global fintech investment is from APAC, where China attracted more than $25 billion, nearly as much as the $26 billion from all fintech investments globally in 2017. Over the last 15 years, the fintech industry has gone through stages from exploration to rapid expansion, boom to bust, consolidation, and restart. I have already articulated the financial regulatory bodies and licenses on my previous episode on WeBank. Nevertheless, this illustration just to show different types of financial licenses required to operate in China. For fintech operators in lending, payment, brokerage, etc., require the new online license to run the business. As for fintech software providers, however, only a regular business license is needed. By 2019, the total number of companies that operate under online licenses already has a sizable presence in the financial industry. The China tech giants possess almost the full set of online licenses through their subsidiaries or partnership. China's fintechs have a mix of business origin. Typical fintechs are internet companies or financial IT firms that evolved into a fintech space, or technology startups created specifically to address financial problems. But increasingly, there are banks that enter fintech ecosystem by creating their fintech arm or collaborating with other fintechs. The last category of players consists of retailers and even logistic firms that has entered the fintech race. A 2018 KPMG and H2 Venture report shows that the top 10 fintechs globally, based on innovation, capital, and size and reach, 4 out of 10 companies are from China, Ant Financial and JD filled the first and second place. Another 2020 report shows the top 10 China FinTech, which lists the key players in the country, where 7 of them have already gone public. The list includes Ant Financial, that has recently attracted much attention over its IPO controversy, and WeBank, the world's largest digital banking unicorn, is also on the list. FinTech's value proposition is to solve business challenges by making financial services nimbler and more attainable to everyone, providing a lifeline for the underbanked and underserved, and creating far more choices and offerings for consumers. The future of fintech in China is promising. The continuous investment that pour into the already sizable fintech sector, local governments increasing R&D spending, large influx of Chinese returnees and overseas Chinese professionals that enter the industry, and a massive graduate pipeline each year are the exact ingredients that support a sustainable growth that help reshape China into the true digital economy. Thanks for watching. Stay tuned for more interesting topics, and don't forget to leave your comments. See you in the next episode.